Hey, Sadie and Jose. Okay, I don't know why the computer's doing that like woo 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 thing today and it wasn't doing it yesterday. It's like not on the computer, it's just on the camera. I'm sorry if that makes you sick. Just listen and don't and look at your book and don't look at the camera. But look what it says, profit and loss in the clothing business. Okay, so this is interesting, and actually you might kind of remember this kind of stuff from learning the last couple chapters of consumer math the last partial of last year. So when we weren't doing videos and stuff like that, but we were having you do income statements and different stuff like that. So this is actually a very helpful lesson, which is why I really want to make sure we do a video and that you understand, because this right here is something that Celio has to deal with, something that Jose, that your mom is doing with the salon and everything like that. You have to know what your profit is. You have to know what your loss is. You have to know what your overhead is for any business. And this is why a lot of the businesses don't survive, because they look at their prices and they think that they'll be covering all of their expenses, but they don't take into consideration kind of like hidden expenses and stuff like that for a business. And so they end up not ever making enough money to stay in business. Okay, so super applicable lesson today for basically anybody that wants to own their own business one day, sell their art one day, sell their services like architecture or anything like that. You guys can apply this to whatever you need to. Okay, so they're using it in a application to the clothing business, which is why it's in this chapter. But look what it says. Clothing which we purchase has been produced by a manufacturer who sold it to a retail store. So like when you guys go to the mall, you're getting a price. That price that you're getting is the retail price from a retail store. They have already bought it from the manufacturer, from the people that make the clothes. Okay, so there's a couple different prices that go into that, right? It says both the manufacturer and the retail store must make a profit in order to continue producing and selling clothing for us to buy. Profit is a form of reward for labor. It is, that's your ganancia, right? It is an incentive to keep on producing. It is an expression of the biblical law of sowing and reaping. Okay, so a lot of times people like get kind of bitter towards people that are making profit, as if we should be giving stuff away for free. You're going to hear that a lot in government and stuff like that. Like everybody should get stuff for free. No one should be poor, etc., etc. But really, your profit is your reward, because you were the inventor, you were the person that worked hard, and you need to reap what you sow. Okay, that's a biblical principle. So it says right here, the profit is not large. It's very true. I've talked about that with supermercados and different stuff like that. It's not a large profit, but if you stay in business for a long enough time and you manage your expenses well, you'll still make a lot of money. So the profit is not large. Usually it is 4% or less of the selling price of the garment. Profits are not made by charging an unreasonably high price, but by producing what the consumers want and by producing a better product more efficiently. Okay, so I kind of agree with that and kind of disagree with that. I think that clothing stores a lot of times do put a very high price to their clothing. However, a lot of times if you're spending like a high price on a piece of clothing, it's because it's made with a very high quality at the same time. So a lot of times people will say like, you get what you pay for. So if you don't want clothes that are going to stretch after the first time you wash them, or that the seams are going to come undone, if you don't want cheap clothing, you're going to have to put a little bit more money into it. Or go to Mega Paca and buy good marcas for cheaper because somebody else already wore them. Which is what I like to do. Okay, but you do get what you pay for. It says profit and loss, right here, are terms used to show a gain or loss in a business transaction. Those are two very important words. You're going to hear that a lot in business. Profit and loss. Profit is when you're making money. Loss is when you obviously, your prices and your sales don't make up enough money to cover your expenses, so you're losing money. It says both are concerned with the cost, which is the price paid for an item, and selling price, which is the price received for an item. So the cost is what you had to pay to get the item. Selling price is what someone pays to buy it from you. Okay, so like if you're the business owner, you want clothes in your inventory to sell, you're going to have to pay money for them. That's your cost. Selling price is what you're going to sell it to the public for. A well-managed business keeps accurate records of how well the business is doing by recording the gross profit, sometimes called gross margin, and net profit. Okay, listen very closely to these. Gross profit, you cannot get excited about your gross profit, okay? It's the first profit that you find, but you're going to start subtracting a lot more expenses from that. So it's not the money that you end up with. But you need to start somewhere, and it is going to be a helpful number, and I'll show you why. Gross profit is the excess of the selling price over the cost, okay? If you look down here, it's just selling price minus cost. Okay, so like let's say that you buy a shirt from a manufacturer for $10 and you sell it for $15. What's your gross profit then? 15 minus 10 is $5. You made $5 off of that shirt. Well, you might be thinking, woohoo, I made $5 off a shirt. That was easy. Be careful, because then you're going to start subtracting other expenses and end up with your net profit. Okay, so that's the next one. Net profit is the excess of the selling price over the cost plus overhead. So that one's down here, net profit. Selling price minus cost plus overhead. What is overhead? Which, by the way, you can also just do gross profit minus overhead, and that will give you your net profit as well. And I'll show you that in the model problem number 1. But overhead, look right here, it says includes expenses such as rent, salaries, utilities, insurance, office supplies, business taxes, training of employees, new equipment, and advertising. And you're like, what? That's a lot. And there's more, I promise you. So what is overhead? When you're selling an item, you also have to pay for renting the building that you're in, paying your employees, paying your water, paying your electricity, paying your seguro, paying your stapler, your pens, your pencils, your impuestos, your equipment, everything, your advertising. And where is that money going to come from? It's going to come from your sales. So you have to take that money out of your gross profit, or just do selling price minus cost plus overhead. So cost plus overhead is in parentheses because you're going to add those expenses all together, minus it from your selling price, and you'll get your net profit. So like, let's go back to the shirt. You bought the shirt for $10, you sold it for $15, you had a gross profit of $5. Well, from that $5, you need to subtract how much you're paying for rent, how much you're paying for this, et cetera, et cetera, et cetera. And you might end up only getting really centavos for that one shirt. Okay, which is why people have to sell a lot of shirts in order to get a real profit. So look what it says. The loss is the excess of the cost plus overhead over the selling price. So what that means is like loss is your cost plus overhead minus selling price. Basically what loss is, you guys, is this. If you get a negative net profit, you lost. Okay, you don't actually need a new equation for that. Look what they're doing. They're just flipping these two from net profit because the expenses are higher than your selling price at that point. You don't want a loss, okay, which is why people need to keep good records so that they know whether or not they're going to get a loss. A listing of the formulas used to find gross profit, net profit, and loss is given. Okay, so that's this one. Okay, let's get to the next page if we can. It always works when I'm practicing and never when I'm... Here we go. Model problem number 1. June Jackson bought a dress for $44 to sell in her dress shop. She estimated her overhead on the dress to be $20.95. She sold the dress for $73.50. That's a lot of money for a dress. Find her gross profit and her net profit. Okay, gross profit's really easy. Look what it says. Selling price minus cost. That's going to be $73.50 minus $44. That's how much she bought the dress for. That's your cost. So that's going to be $29.50. And you say to yourself, woohoo, I made a good profit. No, you didn't, because your overhead is going to be $20.95. So you could go through the whole thing again, $73.50 minus parentheses 44 plus $20.95, or you could just take this $29.50 and minus your overhead, which was $20.95. So $29.50 minus $20.95 is going to give you $8.55, and that's your real profit for that dress. Not too bad, because what if you sell just a couple dresses, you made a good little profit. Okay, let's keep going. This is going to be a 2-part video. Sorry. Love you guys. Thank you for being patient. Look what it says. An operating statement, a summary of the records of profit and loss for a business, is usually prepared annually. A sample operating statement for the tie rack is given. The period of the statement is 1 year. Okay, this is actually really easy to understand, you guys. Look, you're going to put the name of the company right there, operating statement of profit and loss, the date here to the date here that shows that it's a year. Your gross sales is how much people gave you in money for the product that you were selling. You got $200,000. Then you have to less means that you subtract returns and allowances. So that means that people came in, they bought the item, but they returned it because they didn't actually like it when they brought it home. Or some of the items when you buy them from the manufacturer come damaged, okay, and you have to just take that loss. So they lost $10,000. You subtract those two, 200,000 minus 10,000, and you get your net sales, which is 190,000 net, gross, and then net. You have to take those net sales and subtract the cost of the goods sold. So you spent 120,000 buying from the manufacturer. You made 190,000 after you got returns and allowances. So 190,000 minus 120,000, you get 70,000. That's your gross profit. Okay. Then you know what to do because I already taught you the rest. Gross profit minus overhead. Here's all your overhead. I told you it was a lot. Look, that's all your overhead. You add that up and you subtract it from 70,000. And that's going to give you your net profit. So again, gross sales minus your returns gives you your net sales. Net sales minus your cost of goods gives you your gross profit. Gross profit minus your overhead gives you net profit. And that I don't have to go over this paragraph because I just told you all of that. So model problem number 2. Mr. Stein's shoe store had gross sales of $250,000. 14,000 in returns and allowances. His cost of goods is 135 and his overhead was 83,400. Find his net sales, his gross profit, and his net profit. So look what you do. Gross sales was 250,000 minus returns. It's just like that operating statement on the next page. That's your net sales. That's letter A. Net sales minus cost of goods, 135,000. That's your gross profit. That's letter B. Gross profit or gross margin minus your overhead is your net profit, and that's letter C. Okay, so that's all you have to do is just follow those formulas, follow the operating statement, and you'll be able to do all the problems just fine. Okay, and see where it says down here on number 2, loss? That means that you're going to come up with a negative net profit, and that will be your loss answer. Okay, that's it. And look, we didn't do a 2-part video. That's excellent. So let me know if you guys have any questions. Bye.